What's up, guys? Brian from Trade Algo here. I thought it was pertinent to make a video after today's crazy drop. Um, I'm in here all day long in live sessions, day trade with Brian. We didn't really trade a lot today. We sat on our hands, much to people's dismay. But I wanted to make a video because a lot of people on days like today see massive drops and they're wondering and thinking to themselves, why aren't we catching this? Why didn't we make money on this massive move? So if you feel that way, or if you thought that today, this video will explain with practical, pragmatic examples why just because candles are moving, it's not always a good reason to trade, right? The example I give our members quite often is just because you have a fast car like a Lamborghini or a McLaren, and you're in bumper to bumper traffic doesn't mean you can drive fast. You know, if you had someone yelling at you from the passenger seat saying, "You have a fast car, why aren't you going fast?" Because if I step on the gas, I'm going to rear end this guy in front of me. I can't move. We're in bumper to bumper traffic, right? Of course, it's not meant to be a exact, point by point analogy. It's to express an idea. So, I'm going to go over a little bit more detail today. Examples why, unless you're an elite level or supreme momentum or continuation trader, today was just pure panic, pure what I see panic selling, fear-based selling, which I personally just stay out of. So I usually post this a few times in my chat. Give me a quick second. For those of you that are already familiar with this document, kudos to you. One quick sec, I'm sorry. Sometimes this system takes a while. There we go. Alrighty. Let me post a little disclaimer I normally post also for new folks. So for new folks, if you're gonna follow me, that is. If you don't worry about it. But if you follow me in this chat, I highly recommend reading this document and following the instructions on page 1, paragraph 1. But if you go to section C of the document I just posted, I'm going to reference the Technical Analysis Bible quite a bit. So let me open it together with you guys. These are rules of technical analysis that I have memorized because I read this document every day like it expresses here. I read this every day because it only takes me about 2 or 3 minutes. It's not a huge time commitment to read this document at least once a day, right? It's like, how do I describe it? Like you just want to repeat things that you want to get better at, right? So usually we buy calls at support and we buy puts at resistance, right? Very simple caveman strategy that I employ for the market. If we're at support, awesome. And obviously the bigger the time frame that support is on, the better it's going to work. The more respected and reliable support resistance is on the daily instead of the 4 hour, on the 4 hour versus the 1 hour, etc., right? And we usually buy puts at resistance. Now, typically we bounce at support at least once, 2 or 3 times. Usually the more we test support, the more likely we are to break it. We typically break through on test 3 to 6. So there's a reason why I'm going through this step by step and methodically. So if technicals are playing out normally, we normally get lower lows, lower highs, lows. We might even get like kind of something like this, right? Lower lows and lower highs, a little bit jagged, stuff like that. But let's just say this is a daily support. I'm going to put 1 day here. We usually bounce, right? We might even, stop at that lower high, bounce again, a little bit, keep the downtrend alive of lower high, lower high, lower high. We weren't able to get a lower high here, and then we bounce, and this is test 1, 2, 3. We typically break through on test 3 to 6. Maybe it'll break through on test 4. Now, what happens when we break sooner than test 3? Well, that must mean that this rule of technical analysis, it's an observation that I encourage and implore you to back test it yourself. You will see that this rule holds up a good 80% of the time. What's that other 20% of the time where it doesn't bounce 3, 4, 5, 6 times before it breaks to the downside, or in reverse, right? It could be a resistance where we go up, reject, reject, and then we break through. It could be the same thing in reverse, right? But we typically break through on test 3 to 6. What happens if we just break through on test 1? Or for support, we just break through on test 1. That must mean that this rule of technical analysis is not working. What does that mean? Well, that must mean that the market is not neutral. A neutral market is where the technical analysis will work best, where emotion, whether it's positive and just pushing past resistances, or whether it's negative and fear and panic, that's just going to break through supports on test 1 or test 2. I'm going slow, so hopefully it makes sense, guys. I want you guys to get this concept because I'm going to show you some examples from here forward. And I want to go through the popular stocks so you see, oh, that's why he wasn't trading today. And not just me, Mr. Confluence, Dane, Eric. There's a reason why experienced traders sit on their hands even if things are moving. So the beginner trader, usually with a year of experience or less, usually gets frustrated seeing candles moving and they're like, why aren't we capitalizing on this? So I'm going to show you guys. Now for SPY, we were in a inverse head and shoulders, guys. Check this out. Nice little shoulder, head, shoulder, and all we needed to do was break this neckline, get a candle close above, and it would have been bon voyage, au revoir, right? We would have higher highs, higher lows. We might have even dipped a little bit lower before going higher. But what happened right here? Why couldn't that shoulder hold? Why couldn't we get above the neckline? Why couldn't we just get that? We were so close. We were right there. Well, 47th President of the United States has a love for tariffs. Not trying to get political here, just stating objective facts and news and why the market dumped. So we're only here to discuss money, folks. This came pretty much 3 hours before the market closed, right? This is a little bit old. 3-4 hours before the market closed. Trump plans to put 10% more tariffs on China. I don't know how China's going to react to that, but the fear of what that implies for our economy. Are we going to pay more for goods? Are we going to pay less for goods? Are they going to stop shipping us stuff? Like, this is causing a lot of uncertainty, and that uncertainty causes fear in markets. Remember, when there's high emotions in the market, whether even if it's the opposite of fear, optimism and euphoria. We saw what happened to the market when the president was elected. Market got extremely euphoric and just plowed through all resistances, but the opposite is happening basically every day this week. Every time the word tariff is mentioned, the market sees it as an excuse to dump, right? So remember, if technicals are neutral, that's where your technicals will work best. But if there's emotion in the market, I expect this rule not to work, this rule not to work, this rule not to work. The bigger the time frame, the more respected things are. So my daily charts should hold, my weekly charts should hold, right? So all these rules kind of get thrown out the window. So if I memorize them and they're not working and I'm a technicals guy, I shouldn't be trading and relying on something that is watered down. Think of it this way. Would you bet on Superman versus Batman if Superman had a ton of kryptonite tied to his hip? No. If you guys saw the movie Batman versus Superman, that's how Batman was kicking Superman's butt, by using kryptonite to weaken the dude you'd normally bet on, right? So if technicals are watered down, have kryptonite attached to it because some emotion is driving the market and not technicals, you shouldn't really be... I shouldn't say technicals are garbage. They're just severely watered down. Just like a Superman trying to fight with a ton of kryptonite on his back, right? It's not impossible to win, but it's just... why would you take those chances, right? I hope that analogy makes sense. I'm trying to think of another one. It'll come to me. So, SPY. Tariff news comes out, we start dumping immediately. However, something that I do want to point out on SPY, interestingly enough, let me go to the daily time frame. We did hold this daily support where we've bounced off the last month, more or less. Today is the 27th, and pretty much a little bit over a month, so about a month and a week. So trend starts here. We went up, came down. That was a Friday. Went up. That was a Friday also. Came down. We went up, and this was a Friday also. And it's almost like the end of every week seems to be pretty ugly, right? So we just connected these 3 points right here, and guess where SPY ended up today? Interestingly, below the trend line. So not even daily support should hold. Hey, Brian, well, I thought the bigger time frames should hold, right? Because the bigger the time frame on the charts, the more reliable it should be. Well, that's an indication of how much fear there is in the market. If your daily supports are not holding, that must mean, well, what's a bigger time frame than daily to make it more reliable? Weekly. Now, weekly time frames, I'm going to show you some examples of, wow, if weekly time frames aren't holding, everyone on playing the 2 and 5 and 15-minute time frames is not an elite momentum trader or a continuation trader, got absolutely creamed trying to buy calls at support, right? So SPY, not even a daily support can hold, guys. Actually, on this time frame, it looks like it barely did hold, just barely on the 1 hour time frame, which was basically 584.90. It just looks a little bit off on the daily time frame, right? It looks like it's a little bit lower. So we'll see if we get a bounce tomorrow. But that is crazy. Look at this. Just the last few days have been pure carnage. We wiped out $500 million. $500 billion. I'm sorry. B like boy. 500 billion. So $500 billion we wiped out in 1 hour. That's a little scary. That means that there's a lot of fear in the market, which means our technicals are really watered down, right? So if you're trying to trade today using technical analysis, and again, you're not just buying puts with red candles and hoping to get lucky, today was not a good day to trade. So SPY, let me go through a few of these really quick. Apple, this is the daily time frame. Let me show you. I went over this on the live stream today. This is a sloping trend line of support connected here, this wick right here to right here. We got our candle close above to flip this into support. And you can see the very next day we bounced off that support. We couldn't hold that today. See how we closed beneath this sloping trend line? I got to take that trend line off my charts now. It's no bueno anymore. So I just left it on here just to show you that example. That no longer works, unfortunately. Hopefully that weekly sloping trend line still is in play. We need to get back above it by tomorrow, by some miracle, hopefully, right? So Apple daily support couldn't hold. Microsoft, check this out. Remember how we started this video with we should, break support, by the third, fourth, fifth time, boing, 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 and then we break down? Remember, if we break down on test 1 or 2, that must mean we're in fear of some kind. Look at Microsoft. Microsoft just went right through, just blew right through the bottom of a demand zone. Typically, we'll bounce off the top. See how we bounce off the top quite nicely? We bounce off the middle sometimes, and we bounce off the bottom. This one just couldn't hold. Boom, boom. Now we got a candle close beneath that 4-hour demand. Got to take that off my charts. It's now invalidated. And it broke through on test number 2. So Microsoft tried to hang on by the skin of its teeth, but like Apple, lost a major support on the 4-hour time frame. Nvidia had good earnings. Look at it's green. Good earnings, and it just gave everything back and then some. Couldn't hold this 4-hour support here at 124. Just blew right through it on the first test. Check this out, guys. This is wild. This is just mind-blowing. Remember, we normally bounce, get a smaller bounce, and then break through. Nope. Market is like, no, we're just too afraid of what's going to happen. Just blew right through it on test number 1. So I normally don't go through the popular stocks, but I want to show you that if your technicals are not working, why would you use technicals to trade? Does that make sense? It doesn't make them worthless. I personally just wait this out. Wait till the market gets. You're not going to be in fear forever, just like you can't be happy forever, right? You have to let the emotion pass and wait till people come back to their senses and see where we bottom or where we top, right? And then play the range, play what the market gives you. Google, same thing. This is this is so crazy today. Google was in a demand zone yesterday that it was barely holding, just barely holding. Check this out. So huge aggressive push up here. We go from the opposite color candle from the base to the wick, and then we bounce off the top. Tried so hard to bounce off the bottom, and today we lost it. So we lost the bottom of that demand zone, which is typically very, very, very strong support. We lost it on test number 2. So you can see that, wow, 4-hour and daily supports not holding across the board. You know, unless you were chasing those red candles down with puts, which is very risky because bottoms form way quicker than tops, guys. I'm not sure if you guys have noticed that, but bottoms can happen at the drop of a hat, and then we start plowing upwards like crazy, like psychopaths, right? And we got a brief taste of that yesterday. People thought that that was the bottom, but you know, as soon as this word tariff, it freaks. If we haven't got over that, we haven't got over that. We haven't got immune to that. There will be a point in the future, I think, around like 2, 3, maybe 4 months, where we hear the word tariff and we're like, yeah, we know the deal already. But it's still very new to us. It's still kind of we don't know what it means, and humans, of course, have a fear of the unknown, especially when your money and your livelihood is tied into the market, right? I kept on hearing my equities are down like crazy. You know, my stocks are down this much or this much, right? I don't really have an example here for Meta, so we'll move on. AMD, wow, this one, another support that was lost. Check this out. So we were in a bullish wedge. It's like a pizza slice. Starts over here, connected to this red candle. We bounced nicely there. We bounced nicely there. And we just lost it on test number 1. You see how we just lost that support where we have multiple points of support? And we actually shoulda, coulda, woulda bounced here, guys, because check this out. The last time we touched that support was, actually, we also touched it right here. So we have a lot of points of support here. This is a strong support line. We haven't tested this support since February 7th, so nearly 3 weeks ago. What does that mean, Brian? Does that have any relevance? Yes, it does. Because typically, the first touch of a major support or first touch in a while, I certainly say 3 weeks ago is a while, is typically the strongest bounce. But it didn't bounce strong, Brian. What does that mean? Well, if one of your rules of technical analysis is being broken, let's go back to rule 4, that must mean there's too much fear for your technicals to work right. All right, so I wanted to show example after example after example that, yeah, it's not a good trading environment. Just like you shouldn't be stepping on the gas in your really fast, expensive car if you're in bumper-to-bumper traffic. You're just dying to get into an accident, just like trading when the environment it's not set up for you to win, right? Some people got lucky just saying, what the hell, I heard tariffs, I'm going to just take some puts and see what happens. Some people got extraordinarily handsome returns doing that, but I find that to be absurdly risky. I'd rather, follow the logical way, right? But when you're trying to be logical with somebody emotional, like somebody drunk, are you going to get anywhere? Probably not, right? So I'd wait till they calm down, till they're sober, and then we'll have a logical conversation, much like the market. I'm not going to deal with you until you get back to your logical self, and I can use these rules that are all logical, by calls at support, by puts at resistance. Use the bigger time frames for support and resistance. Expect at least 1 or 2 bounces, especially the bigger the time frame, etc., 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 right? I'm almost done. Help indulge me a little bit longer. So Amazon, we'll see what happens at that demand zone, but I do like 205, basically between 205 and 207. We'll see where it bounces. I'll probably try to grab the bottom of those demand zones, the 4-hour and daily demand zones, somewhere around 206. Going something like that, like we did last time. But again, remember, we're not really bouncing in this kind of fear news-based environment. So it's going to be a big will see. You can't just long levels just because, well, it's the level he said. You have to see, like, did we say tariffs again? How is the market feeling? What is SPY looking like? It's a big juggling act, right? IWM, I use an indicator called the super trend. And usually I like this thing on bigger time frames. You see the shaded area right here. I know Eric uses this as well. Um, Check this out. So super trend starts over here. Basically, we're still in a bullish trend. This is the simplest way I can describe it. And see how we bounce right there off the weekly trend? As soon as we get a candle close below this kind of shaded area, we're no longer in a bullish super trend, right? So let me zoom back in and show you how dangerously close we are to losing that weekly, which again is a big time frame. So right here, 211.96. If we close below that tomorrow, which is the week's close, say goodbye to that bullish super trend. How much lower we're going to go? Maybe 210 on IWM, maybe 207-ish. Hoping for a bounce at those two levels. I don't know. It's again, when there's fear in the market, I personally just wait it out. It's like a hurricane. Take the windows, wait for it to be over, right? Qs just broke through a demand zone on the first test since the beginning since middle of January. This is wild. So demand starts over here sometime in late November, early December. Huge aggressive push up here, right? So we go from the opposite color candle before that aggressive push of green candles from the body to the wick. Remember, we can bounce at the top, middle, and bottom. We bounce off the top pretty nicely here. We bounce off the middle pretty nicely here. And we bounce off the bottom very nicely and recreated the same kind of move it had previously, right? So we went through this rule one more time. Remember rule 13, was it 12 or 13? 12. The first touch of a major support or first touch in a while or a long time is typically the strongest bounce. And normally, if it's a pretty decent time frame, the more we test the support, the more likely we are to break it. We normally will break through, not on the first test if things are looking okay or decent, but check this out. We haven't touched this demand since all the way over here and then just boom, broke right through it on the first test, guys. This is not an environment to just let me see what happens kind of trades. That's called gambling. And I know Dane encourages people. Of course, we can't give you financial advice in any way, shape, or form, but he's okay with sitting on his hands, and that's why he's an analyst at Trade Algo. Same with me. I know people get frustrated seeing things move, but I'm demonstrating to you guys, yeah, it's not the right environment. Let's wait till the emotional nonsense is over, and then we'll trade when things are looking up, because we've gone through periods of like this before, right? They don't last forever. Even here, red day, red day, red day, and then we bounced up. This is just, I think we're going to reach exhaustion, at least for a little bit with this tariff stuff, because it's really freaking people out. And even if it's not freaking people out, they're just using it as an excuse to panic sell anyway, right? So I personally am going to wait till the market conditions improve. I'm going to see what futures looks like in a bit, in the next 38 minutes. I might give a follow-up video. But if you guys have questions or concerns, let me go back to my chat, live sessions, day trade with Brian. You guys can always email me at BRIAN, like Nancy, at the name of the company, tradealgo.com. All right. So hopefully this video was enlightening. Like I said earlier in the video, if you guys were taking down notes, hopefully, maybe we'll get a bounce at this support, some sort of relief rally after this pure carnage. 1, 2, 3, 4, 5. Oh my, 6 days, just an entire week of not being able to breathe, being held underwater. Let's hope that we can get somewhat of a bounce tomorrow so that we can have a nice day full of trades, because I don't like holding back trades from you guys. I actually don't think it's right or fair, especially if you're a paying client, to hold back any trades, like do trades on the side and hold them back from you. But I will alert only when there's a good risk to reward, right? When there's confirmation, enough confluence, right? I don't hold back anything from you guys. So if I know you want trades and I see the market is not good for trades, I will sit on my hands, right? Even if people beg and plead. It has less to do with my emotions and everything to do with the logic that is seen on the charts, guys. So I hope this video helps in some way, shape, or form. If you guys need further explanation or analysis, I'll point to, usually this document has all your answers. The technical analysis, no, excuse me, the guidelines document, the prescription for success, is designed to answer 99% of your questions in advance. But if you guys have questions and it's not in this document, I'm super happy to answer in detail via email if you guys have further questions. All right. On that note, guys, have a wonderful and blessed rest of the evening. Hopefully, none of us were beat up too bad in the market. Fridays are typically my best day in the market, so I'll be joining Dane tomorrow here in live sessions, live trading room. So I'll see you guys there bright and early, 9:30 a.m. Eastern. As always, have a wonderful evening and take care.